Land acknowledgement. As we gather together, we acknowledge the sacred land on which we reside. It has been a site of human activity for 15,000 years. This land is the territory of the Huron-Wendat and Petun First Nations, the Seneca, and most recently, the Mississaugas of the Credit River. The territory was the subject of Dish with One Spoon Wampum Belt Covenant, an agreement between the Iroquois Confederacy and Confederacy of the Ojibwe and allied nations to peaceably share and care for the resources around the Great Lakes. Today, this gathering place is still the home of many Indigenous people from across Turtle Island, and we are grateful to have the opportunity to work in the community on this territory. We are also mindful of broken covenants and the need to strive to make right with all our relations. Last but certainly not least, we acknowledge the people of African descent who were brought here against their own will or in search of a safe place to live their lives and raise their children. Reconnaissance des terres. En nous rassemblant, nous reconnaissons la terre sacrée sur laquelle nous résidons. C'est un site d'activité humaine depuis 15 000 ans. Cette terre est le territoire des Premières Nations Huron-Wendat et Petun, les Scéniques et plus récemment les Mississaugas de la rivière Crédit. Le territoire était sujet de l'alliance de la ceinture Wampum plat avec cuillère, un accord entre la Confédération Iroquois et Confédération des Ojibwe et des nations alliées à partager et à prendre soin pacifiquement pour les ressources autour des Grands Lacs. Aujourd'hui, ce lieu de rassemblement est toujours le foyer de nombreux peuples autochtones de toute l'île de la Tortue et nous sommes reconnaissants d'avoir la possibilité de travailler dans la communauté sur ce territoire. Nous sommes également conscients des alliances brisées et de la nécessité de nous efforcer de guérir toutes nos relations. Dernier point, mais non le moindre, nous remercions les personnes d'ascendance africaine qui ont été amenées ici contre leur volonté ou à la recherche d'un endroit sûr où vivre leur vie et élever leurs enfants.
This webinar provides illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Black Business and Professional Association. The BBPA makes no representations, warranties, or guarantees as to assume no responsibility for the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use or reference to or lines on such material.
Hello and good morning, everyone. Warm welcome to BBPA's Community Space for Financial Literacy. I'm Chanelle Smith, and I'm absolutely thrilled to be your host for the next 7 weeks before we dive into this exciting journey. Allow me to share a little bit about myself. I've spent over 7 years working in the financial industry and studying finance. I'm passionate about helping individuals and communities achieve financial wellness. My journey in this field has led me towards this wonderful opportunity to facilitate this financial literacy program with all of you. Over the next 7 weeks, we will be exploring the world of credit and credit rebuilding. And I couldn't be more thrilled to have you all here. It's a subject that can sometimes feel complex, but together we'll break it down into manageable and actionable steps. Now we've got two remarkable facilitators who will be guiding us on this transformative journey. Today, we'll have the privilege of hearing from Shaquille Shaq Hall, who is an expert in his field and passionately advocates for financial literacy. Allow me to introduce you to today's facilitator, Shaquille Hall, and share a bit about his background. Shaq Hall is a mortgage professional and an entrepreneur with a wealth of knowledge and experience in the financial industry. He's the founder of Hall Real Estate Investments, providing investment solutions through investing, acquiring, renovating real estate, enabling his clients to achieve their financial goals and earn passive income. With almost a decade of experience in the financial industry and over 1.5 million in transactions, Shaq Hall has helped hundreds of people to secure home loans, registered investments, retirement funds, and budget plans. He's not only just a financial expert, Shaq is also a community leader, actively involved in nonprofit organizations and advocating for financial literacy with the power of credit and teaching others how to build wealth. So thank you, Shaq, for sharing your incredible expertise with our community. With you guiding us for the next several weeks, we're in capable hands as we explore credit and financial empowerment. Now let's continue with our morning journey towards financial freedom and empowerment with Shaq Hall, who will be leading today's session. Shaq, thank you.
Good morning, good morning, good morning. Can you guys hear and see me clearly? Just want to make sure. You can just type some ones in the chat box. I'm excited again to be on another call with you guys. Just want to see if you guys can hear and see me clearly. Just type some ones in the chat box. And just like last week as well, we're going to need the engagement. We're going to need the energy. We appreciate all of you guys for jumping on. You guys could be doing anything in the world at Saturday morning, but you decided to tune into this call with us talking about credit and credit repair for this series, this amazing series that the BBPA has put on. And this is week 3, and we're going to continue going on all the way to December. So very excited. And if you're excited, just continue to drop some ones in the chat. So I'm seeing the chat box getting flooded up right now, which is amazing. Thank you, thank you, thank you. I appreciate it, guys. So this week, today's topic that we're going to be speaking about and having a conversation. I say we because this is more of a conversation rather than a presentation. We do welcome feedback. We do welcome a participation from the chat or unmuting your mic, because this, again, is more of a conversation that we're all going to be learning together, providing some feedback. Yes, I have the expertise in this industry, but I love to share my knowledge, and not only that, but hear from the audience, hear from people who are tuning in as well too, so we can all learn together and grow together. And in my opinion, credit is one of the most powerful things to establish wealth here in Canada and in North America in general. Okay, so today we're talking about positive credit history. Last week we talked about some negotiation and techniques. Today we're talking about positive credit history. But before we get into the actual today's topic as well, for those who were in last week, you gotten a survey at the end of the call that allowed you to leave some feedback. So thank you for everybody who left feedback, for myself, for Chanelle, for all the speakers on the call, and for the BBPA. It does help us become better, and we like to hear from you guys as well too. There will be another survey, I believe, at the end of this call as well. I encourage everybody to provide your feedback at the end of the call as well. All right, so before we go into today's topic, as I mentioned before, there was some feedback from last week I just wanted to touch on real quick. And I'll touch on all those points, and then I will go into today's topic of positive credit history, or positive credit history. So one of the comments that we had was an actual comment regarding the bank. They wanted to know a little bit more about using funds to invest, and understanding that the banks are not our enemies. It's our allies. So somebody made a good comment on there, and they wanted to share towards the end the fact that banks are working for us, using and investing our funds, but assuming it's the right place for a financial landscape. And that comment, I'll touch upon it real quick. Yes, as I mentioned before on the call, the banks are our allies. We want to use them. The top 5 banks in Canada are some of the best in the world. And that's why you see Canadian banks across the world internationally as well. So you want to use them wisely. You want to create good history with them, relationships with them. You want to make sure you're helping your kids as well, opening accounts very young, teach them aspects of saving. budgeting, and of course, once they're old enough as well too to get a credit card. So thank you for that comment. Another comment was they wanted to use more information of actually how to read your credit report. So if I were to do that, I'm gonna be honest, it would take very, very long on the call to go through it in detail. But what I can advise everybody on this call is to visit Equifax or TransUnion. Those are the two major credit bureaus in Canada that you can visit, and you can download your full report either online or they can mail it to you. On there, it's going to give you all the information that you need. It's going to show you exactly where you live, your employment. It's going to show you all your inquiries of every place that you went to pull your credit. It's going to show you your actual trade lines, which will either be your credit cards, your loans, your lines of credits, mortgages. All of that stuff will be showing on your credit report. I do like, again, Equifax a little bit more than TransUnion. It goes into more detail and shows you all the payments that you've made on time, some of the missed payments, the delays, but it gives the consumer, which is us, all the information that we need in order to make, right financial decisions, all their history as well too. Like I mentioned before, it is your report card after you graduate school, and it also gives the lenders, financial institutions, all the information they need to see what is this person's character. Are they able to handle capital? Are they able to manage a mortgage or a credit card, a line of credit for a specific amount based on what their income is as well too. And it is an algorithm that they produce a 3-digit score that allows you to see exactly where you stand from 300 all the way to 900, which would be a perfect score. Okay. So credit report, it would be very difficult to actually go through it in detail on a call, but definitely pull it. I would say visit a financial advisor that will be able to go through it in detail with you, and to allow you to know exactly what does it mean on these certain reports, and some of the lingo on there as well. I think it's very straightforward. Once you do download it, you'll be able to identify some of the aspects on there and make informed decisions. But I would definitely say visit a financial advisor, somebody one-on-one that can kind of go through that with you. But unfortunately, we can't do that on today's call because it'll just take way too much time. And then we had a question as well too regarding, and I'll touch on this very, very briefly before we go into today's topic, funding of credit bureaus. As I mentioned, there's two credit bureaus in Canada, and the funding of the bureaus, it comes down to subscription from consumers, people who pay for the services on the credit bureaus, where they're paying a subscription monthly for identity theft to make sure that nothing is on there that is not of a consumer's rightfully doing, or somebody else has maybe accessed that, monitoring their services just to make sure that everything is accurate. They get alerts every single, I think, month, I believe, when you pay for the credit bureau reports. They also have systems as well too that help you build your credit. That allows you to report directly to them. And then lastly, they make most of their capital and the funding of the credit bureaus from financial institutions. Financial institutions actually spend a lot of money to collect consumer data, right? Whether it be the car loan financing person that you go to. These companies, they spend a lot of money just to see and to pull these reports and report which customers are paying on time. And that allows them, again, to determine what type of interest rate they can charge you, and it's to see what type of character a consumer is as well. So keep it very short and sweet, it is financial institutions and it's also consumers that fund the credit bureaus. And I'll touch on the last two topics or last two comments and feedback that we got from last week's call. Negotiation tips that I mentioned as well too is knowing your report, knowing your rights from the Consumer Canada website. I will drop that link as well too, again, in the chat box for those who weren't on the call. And I will make sure we get that at the end of the call as well too. Please visit these websites because it is free and it provides valuable information from the government of Canada that allows you not only to manage your debt, but gives you tips and tricks of knowing your rights. So when these collection agencies start to call you, you can boldly and confidently talk to them and let them know ways that you can devise a plan to repay back your debt. Okay. There's a lot of information on the site. Like I mentioned before, it's free and there's multiple different hyperlinks in there that can bring you to different areas. So that can help you guys from last week's call again, to help you negotiate and provide some tips for you to navigate some of the things on your credit report. And as well as you can go to directly to the Equifax or TransUnion, the credit bureaus of Canada, and negotiate some of these things or discrepancies on your report as well too. They have a pretty robust system, whether you're writing a letter directly to them or you're submitting it online to remove anything that's not there, any inaccuracies on your credit report.
Are you good to take a
And then
question?
lastly, sorry, say it again.
Sorry to interrupt you there, Shaq. I want to know if you're good to take a question. Michael has his hand up,
Yeah.
I think, from your previous topic.
Yeah.
Okay. Yeah, we can touch on a question, sure.
You want to? Okay.
Morning. It's a short question. Just remind me, because I should know I'm in the space, but I'm not an expert on the credit. Isn't there a law that says when you go and get a loan or something like that, the institute must report it to the credit bureaus? I can't remember if that is the case. But you're talking about how they gather the information and who's funding. But isn't there also some sort of regulation which says if I go to buy a car via a loan from a bank has to report the fact that I've got a loan from them to the credit bureaus or some place where the credit bureaus can access the information on my loan. I'm not
Yeah,
certain.
so just so I'm understanding your question properly, is there a lot? Yes, there's different bodies of regulations for credit bureaus as well as financial institutions as well too. But yes, they do share that information because the financial institution, they're spending money as well too, like they would spend money on software. They're collecting these data and they're able to um, share information from credit bureaus. I'm not too sure if I'm answering your question, but yes, there is a law. In terms of the law, I'm not too sure exactly what specific law you're referring to, but there is government bodies that do protect not only the consumer, but the credit bureaus of Canada and as well as the financial institutions as well.
Okay, I was just thinking
So just
that I was just thinking that people may be asking, how is it they get my primary information? Especially because of privacy and that kind of stuff. I walk into a
so
car dealership and
so yeah, so to answer your question in terms of information, just from my experience working with a financial institution for over 3.5 years, um, when you sign up for a financial institution and you opening your bank accounts or opening a credit card or any product that you decide to get, you are signing terms and conditions that most people do not read, and it does allow them to share your information to the credit bureau. So it's in fine writing. So I would say, and I recommend as well too to anybody listening to this on the call is, take the time to read it. A lot of the language you're not going to understand, I'm going to be honest, because it is in legal terminology. But try to get a financial advisor, whoever is helping you open a product, to go over some of the details with you, or bring it to a lawyer. Maybe a lawyer can kind of explain it in layman's terms for you. But these terms and conditions that you do sign allows them to share their information.
Yeah, and it's
Let me
also yeah,
go
sure.
ahead.
No, just to build on that, it's also good to note that those type of legal passageways are more protectant of the consumer. So if you were getting loans from institutions that weren't reporting to the credit bureau, you're at risk as the borrower. You're at risk if that institution was to shut down or to run off with your repayment or do anything that was unacceptable or inappropriate. The credit bureau is your line of defense. So that exchange of information, it is legal. We typically do agree, and it's definitely to protect the borrower or the consumer.
It's a great point, Chanelle. Thank you. And then lastly, I'm just going to touch up on the last point of feedback. Someone was asking for us to touch up on more business credit. So you're going to have to tune in on the series. I don't want to give away too much on one individual call, but we will, I believe at the end, Tafari was going to touch a lot on business credit and how you guys can get some access to capital if you do have a business as well. And understand, guys, having a business, having a corporation, you're having your own type of credit for that as well too. So you're gonna have it on the personal side, But when you have a corporation, it's like it's its own baby, right? It's its own entity that can build credit as well too. So for some people who have, terrible credit, maybe you can have bad personal credit, but on your business side, you can have tremendous business credit and start fresh there on that side as well too. So I'm excited for that towards I believe the end of this segment series. We're going to be touching a little bit on business credit as well too. But for now, we're going to keep the conversation more on the personal side. But a lot of the things on the personal side does relate to the business side as well too. So hopefully that helps as well. All right. So again, thank you guys for the feedback as much as possible. I appreciate it. And let's keep it going and have some feedback as well too at the end of the call today. So today we're talking about positive credit habits, as I mentioned before. And we're going to talk about strategies and using your credit responsibly. But before I get started, as always, we're going to ask a question so we can get some engagement from the audience. Feel free, if you guys have an answer to this question, you can either unmute your mic and speak, or drop it in the chat box as well too. So my question for the audience is, what factors do you consider when you're applying for credit? Whether it be a credit card or line of credit, what are factors that you consider, and how do you ensure you using it responsibly? Or how do you ensure you're using it? Yeah, how do you ensure you're using it responsibly? You're making sure that you're going to be able to manage that. So let's just say, for example, for myself, when I was looking to get a brand new car 3 years ago, I had to think about the perfect time to get the car, because I knew that they were going to do a credit check on me, and a credit check means that they're going to pull my credit report, and they're going to see all the debt, all the way how I was paying my credit down. They're going to see my utilization. They're going to look at my score. They're going to look at everything on the credit report, which you can again access from Equifax or TransUnion. But I had to make sure I took care of some of the bad debt that I had. So to take care of a lot of the credit cards debt that I had, to make sure my utilization was a little bit lower. And I had to make sure my credit was at a good credit score. And in my opinion, I think at 700 was a good time. And I would end up going to apply to get that brand new car, because I knew my financial shape was good. And I ended up getting a good interest rate. So I open it up to you guys now on the call. I shared an example for myself. I would love to hear from you guys. What are the factors do you consider before applying for credit, and how do you ensure you can use it responsibly for obtaining that new debt?
You've already got a couple here. Juliet said interest rates. Sieg D, I hope I pronounced your name correctly, said reward points. That's a good one. Dwayne Davidson said length of employment and how I manage my credit. And then Juliet also added on and said credit limit on the credit card, due dates, etc.
Amazing. Anybody else? I see a hand up as well too.
Chanelle's hands raised. Let's hear from Chanelle.
Yeah, so for me, good morning. So for me, I would say that I just make sure that I pay off whatever balance that I have. I have what is perfect credit score? What would it be considered? Is it 750 or 800?
So a perfect credit score will be 900. 100% perfect credit score will be 900. I've never seen that before, but I have seen amazing credit scores of
excellent,
800
right?
and above. Yeah, excellent would be considered 800 and above.
800 and above. Okay. So I would say that I have excellent credit, a credit score. And what I do is I practice to just pay off, whatever balance I have on my card. And I've been doing that for years. I would say like my only downfall is that there's a little bit of fear there, because I have all these line of credits and in credit cards and all these things, but I'm not really benefiting from it because I really don't know how to use it. Um, I can say on the flip side, I am kind of benefiting because I have like cashback when I use my Visa credit card with TD, and I can say that I've made hundreds of dollars back in cashback. I was looking at my account the other day, and I was like, wow, I would never think back years ago that I would ever be getting so much money from a bank. So the cashback cashback reward has been excellent. So that's just my testimony of that.
Thank you, Chanelle. And Chanelle, what is it that you do as well too?
What do I do for like a living career wise?
Yeah,
Also, yeah,
yeah,
so I'm a child and youth worker with the Toronto
amazing,
District School Board. Yeah.
There you
amazing, amazing.
go. Good benefits. That's why.
I heard somebody say good benefits. I love it. That's exactly what it is, and I appreciate it. For those of you who are sharing as well too, if you can just introduce yourself when you do share and what it is that you do, I think of it's very, very valuable. But you shared an amazing story, and you shared some great feedback that I want to highlight as well too. I touched upon on last week's call, but it's very important to research the credit that you're applying for, especially when it comes down to credit card, because when you're spending cash, right, and you're spending your debit card, you're not getting anything back. That value, the money that you're spending, you don't get anything. But now with credit now, the power of credit is with some of these programs, some of these credit cards, you're now getting something back. So in the instance of Chanel's example, she was getting cash back. So not only is she spending, let's just say $1,000 every single month, but now she's getting, maybe $10 to $100 every single month off of the spending that she's making. So if you're going to spend it anyways, which we are consumers, we're going to spend it, why not get something back? Whether it be the travel rewards, whether it be some type of rewards points, whether it be cash back to you, that way you can use some of that to actually pay off the bills. It's very, very valuable. So going back to today's, or the question I asked as well too, where someone was saying, or a lot of people in the comments were saying, knowing your credit limit, knowing your due date, your income. Income is another point I'll take a second to talk about as well too. You want to make sure if you have a new job, hopefully it's in the same industry that you've been in for a while as well too, because that's something that they look at as well too. So that's something you want to consider before applying as well. If you have a new job, maybe you may want to wait until you're done your probation, maybe after 3 months, maybe after 6 months. I know for myself, working in the mortgage industry, that's something that lenders very scrutinize as well too. Whether we be working in the same industry, or is it somebody that's working from one industry and then they're going to another one and to another one and they have a brand new job, that doesn't show stability at all. So your credit report also shows stability as well. So you want to keep that in mind before applying as well. So great points, great feedback so far. Is there anybody else that wants to share?
Yeah, you got something in the comments here. A question. I don't know if you want to weigh in on this. What would you say is a good offer for cashback or rewards, whether that's percentage wise, etc.?
Yeah, amazing. I would say I think they start off around 2% cashback. But anything I would say above that, like I've seen some reward cards that do about 4%. I see some promos that they have certain promos for a specific amount of time, whether it be, the times that people spend the most, which is around this time, November, and Christmas time in December. You'll have like 8% cash back, which will double the percentage. So in my opinion, anything over 2%, which is kind of the standard, is a good cashback card. And those are great to have. And in terms of rewards, it has to be rewards that you actually going to utilize. Some of these rewards, they give you points for Amazon. If you're somebody who's big on spending on Amazon, if you're somebody who's big on spending on Starbucks, they have Starbucks rewards. There's rewards for movies at Cineplex here in Canada. So a rewards, it has to be based on what you like to spend your money on. That makes the most sense. I do know that Amex, American Express, they do have amazing reward system over there as well too. But pick something that's suitable for you. Any other questions or comments? Okay, I'll continue. So yeah, understand different credit options, understand the terms and conditions. Essentially, the terms and conditions is how long are you getting this credit for? If it's revolving, you technically have that for life. And what I mean by revolving in terms of that term, revolving is credit that you constantly are able to utilize forever. And as you pay that down, it's open for you. And it's how do I, what's the word I'm looking for here? It keeps going. It's a gift that never stops, right? So one of the best products that I like personally, especially on the mortgage side, instead of getting a mortgage, I like home equity lines of credits, which they call it in short form HELOCs. And the reason being is because it's attached to collateral such as real estate, you're able to borrow against that and either purchase another property or use that to fund a business or whatever you like to do for it. Some people privately lend out of it. There's so many different avenues you can do and borrow against your home. But that is a form of revolving credit. And installment credit, we talked about on the previous call as well too, is just things that you are paying down, you don't get anything back. So that's like a traditional mortgage where you're paying down the debt of the principal and interest, and you don't get any equity or anything else out of that. And as you're paying it down, eventually it's going to be amortized by a specific amount of time, and the debt's going to be done. While revolving, again, the debt is always nonstop and going. So no understanding the difference between installment and revolving credit. Understand the terms and conditions when you are signing the dotted line for your credit card, line of credit, car loans, mortgages, and apply for credit when it's necessary. It's not always needed for credit. Maybe you have too much credit, or maybe some of you guys who have amazing credit, maybe you don't have enough credit. Maybe you only have one credit card or just one loan. Maybe you need something else, right? It all depends on your situation of what you're looking to do. I know for students as well too, we do get in a lot of debt at the early ages because we are going for school, but that is considered some type of good debt, especially if it is a student loan, whether it be National Student Loans of Canada or OSAP. That's considered good debt. The bad debt are considered the credit cards. The ones who have the higher interest are considered the bad debt. And like I said, applying for it when it's necessary and keeping your utilization in check. One of the things to consider a lot as well too is to have your utilization very low. That's going to help tremendously help your credit. So in Chanelle's example that she mentioned and that she shared, she pays it off right away. So her utilization is either zero or very, very low. The rule of thumb, I'll mention it again, is that lovely number of 30%. You want to keep your utilization of 30%. Okay. So on to the next topic. And I do have another question for you. So let's talk about different types of credit. And I kind of talked about it before in the first point, but I have a question for you guys. What are some experiences or different types of credit that have impacted your credit history? So share some experiences of different types of credits. And I mentioned before, the major two types of credits are installment and revolving. What are some experiences or different types of credits that have impacted your credit history? Anybody want to share? And if you are unmuting your mic, please just state your name and then what you do as your career. I would love to hear from you guys as well too. I actually enjoy the people who unmute their mic and share on the call. It keeps it fun.
I'll start first because whenever I start, then usually like everyone starts to jump in. So I'll start first. I can talk about student loans. I know that student loans actually have what we would consider like a null impact on your credit as long as you are in repayment or you're still in school or you're keeping up with the repayment program, which is just updating them on your income and that kind of stuff so that you could either keep your payments interest free or at zero. Learning about this really affected me because I was extremely worried about post-secondary when I first started post-secondary. I'm thinking about how student loans would affect my credit score, affect the rest of my life. And learning this information actually opened up my mind to going to school because I understood that while I was in school, that debt incurring would not have a negative effect on my credit score. So I would say learning about student loans and the type of loan that is really had like a positive impact on my life.
I'm glad you shared that as well too, because I'll bring it back to even the National Student Loans Canada's website as well. Online, we are in a digital era, but they're giving free information on there as well. There's so many different things on that website that shows you of not only how to calculate your loan, but different repayment strategies as well too that you may have. There's assistance programs as well too that you can defer some of that debt. And this is why student loans, yes, they do consider they're gonna look at the entire overall amount that you owe, and it will affect your purchasing power a bit. But what helps a lot of students do once they graduate from school is a lot of them are on repayment programs, right? So with the repayment programs, some of them are not even paying down that debt at all. So that's not going to affect their ratios as well. So that's why it's considered good debt. But it's very important to understand a loan like a student loan is an installment loan where you're going to be paying that down on a month-to-month base, right? So as I mentioned before, revolving and installment. So revolving, you want to think of credit cards, and installments, you want to think of a loans and a traditional mortgage. And the thing that you want to stay away for, just to go back to it, because it's going to be an overall um topic or point that we're always going to bring up when it comes to credit, because this is the major reason why most people's credit scores do fall, is because of retail credit cards. So be mindful of when you're going to the Canadian Tires or the Walmarts or some of these retail stores and they offer you credit cards. Yes, they have great rewards programs, but they have some of the highest interest rates as well too. You try to stay away from some of these cards. It's good to have maybe one, but try to stay away from them as much as possible because they do have the highest interest rates when it comes to revolving credit. Okay. Anybody else want to share anything when it comes to installments or revolving experiences that they may have had that affected their credit or maybe affected it positively or negatively? Is there anybody on this call that probably only has only one type of installment? Sorry, one type of credit product, which is like a revolving one, maybe just a credit card and that's it, and maybe have no installment. That's maybe affecting their credit card negatively. I would love to hear one more other experience.
Yeah, let's hear from Michael. I'm not putting you on hold. We just have a new hand. So let's hear from the new hand first, and then Michael, I'll let you go first. So Amani, you can go ahead and share with us.
Hello, can you hear me?
Good morning. Yes, we can hear you.
Okay,
Yes, yeah.
perfect. Yeah, good presentation. I'm gonna make it very short. I think 5 years ago, when I applied for a specific credit, the way they explain it to me is that the percentage, like the line of credit, the way the line of credit affected my credit was completely different from the way the credit card, for instance, affected my credit, or even the bank account if you have an overdraft, depending on the overdraft. So it was interesting to learn that there are some different dynamics which I didn't know, that credit card line of credit, they will tell you this one has a higher percentage, how much it affects. So I can't remember the details, but it was quite a discovery for me that those things affect me differently.
Yeah, thank you.
Thank you.
Thank you, Amani. I appreciate, and this is what I love too, when people share, because you've stated a great and amazing point as well too. As I mentioned before, to have a mixture of these credit line or different types of credit products, it helps tremendously. And yes, they are weighted a little bit differently. From my experience in working with the financial institutions and working in the financial institution, you want to have credit card, you want to have a line of credit, and you want to have a mortgage. For the bank's perspective, what they want to do is they want to that every time I think about it, I always remember the Capital One slogan. If anybody knows it, what's in your wallet. They want to be in your wallet. They want to franchise you in everything. They want to have you a checking account, savings account, but they also want to have a credit card, line of credit, as well as a mortgage. Now, in my personal experience and what I've noticed, as I mentioned before, prior, a line of credit is one of the best types of credit products you could potentially get. You're taking advantage of the cheaper interest rates. They're usually about prime, and prime is the Bank of Canada's rate, plus usually about 2%. These financial institutions charge. The Bank of Canada's overnight rate is what they charge the banks, the institutions, and then from there they take that money and they put a premium on that as well too. So they have something called Bank Prime, which is about 2% over the Bank of Canada's rate. So it's usually prime. Right now, it's about, as we're speaking in today's call, it's 7.20 here in Canada. So a line of credit will be roughly about 2% higher than that on average, 2 to 4% higher. So it would be roughly about 9.2% to all the way up to maybe 13 to 14% on a line of credit. So that's a lot cheaper in opposed to a credit card, which is standard credit card is 19.99%. And you see credit cards on the retail side all the way up to 29.99% as well too. So Yes, it pays to have a mixture of credit products. And yes, they have different weightages of what interest rates that they do charge you.
And you've got some hands, you've got quite a few. So let's go, Michael, first. I know you've been waiting, Michael. Go ahead. Let's hear from you.
I'm okay, I could wait. I just sometimes I like the kicking. Just a comment and a question. The question is when you just started out, especially as students, you getting your first credit card and so, where on the scheme of this credit score you find yourself? Is it that you start at the top and you kind of go down, or you start at the bottom and go up? So that's the question. Where do you start? You haven't got any
Yeah,
credit, and you're getting your
yeah,
first credit card. And
yeah,
an experience I'd like to share is you can actually call the credit card providers and ask them for a change in the interest rate that they charge. And they do give it to you. It's at 19.99. And if you're with them for a while, you just call and say, listen, can I get a better rate? I did that and I lost 10 points.
Yeah. Yeah.
19.99 to 9.99. So
Yeah. And Chanelle,
yeah.
who we heard from earlier, that's in great credit standing. I was actually going to note that when Shaq was finished, that with her credit standing, she can call a lot of her product providers, so whoever she has financial products from, and begin to now negotiate her interest rates against the rewards that she's getting as well. So if her rewards are 2% cash back and she's paying 19.99, she can negotiate and leverage both ways, lower interest and higher cash back with her credit. So that's great, Michael. Thank you. Do you want to hear more, Shaq, or do you want to comment?
Yeah, I'll comment real quick on that.
Yeah.
On Michael's point. Yes. So you typically start at if you have no credit, it's like zero. There's nothing when you pull a report. Like I've seen somebody who has nothing, and very young, they have no credit history at all, and their score is actually zero. But typically, once you do get your first credit card, you roughly start out around the middle, which is about 650. And that's where typically students start off at around the middle, around 650. So that would be considered the starting point. If you have at least one product, which would be a credit card or even an overdraft as well too on a bank account. Considered a credit line as well too, which show up on your credit report.
Okay,
we can keep going.
Okay. Let's hear from Dwayne. Go ahead, Dwayne. And Monique, you'll be up next. So if you're ready to go too, after Dwayne's done, you'll go ahead.
I guess for me, well, I'm employed right now, but I'm trying to find work in tech. And then I pretty good debt, but something happened where it kind of affected it. So now it's kind of I'm just using Capital One to increase my credit score again. But I was trying to understand about utilization. I think I understand what it is, but I just want to double check. So I don't like to assume anything. But I guess that's a percentage of how much money you have on your credit card to spend, pay back, right? Pretty much. Is that correct, Shaq?
That's exactly it, man. You got it on the nail, right? Utilization, just to keep it very frank, if you have a credit card of $1,000, you want to keep your utilization, the amount you're actually utilizing on the card, about 30%. That's kind of the golden rule. If you can do that, it's going to help your credit increase tremendously. And if you're paying it off right away, even better. But it does help sometimes. I found if people have low credit scores to keep a small balance on there to keep the banks and the institutions happy because they make money off of interest, right? So they want you to have at least a little balance so they can make some money on the interest side as well too. But yes, utilization is the amount that you're actually utilizing on that limit that you do have.
Yeah, okay. Thanks for telling me that because I was definitely for quite a while, and I noticed my credit score wasn't going up, and I'm kind of like, why is that not happening? And so at least now I understand that. So okay, thank you, Shaq.
Thanks so
No
much.
problem. No problem.
Monique, you can go ahead. Let's hear from you.
Good morning, everyone. I just want to commend you guys for putting this together because I feel like when we talk about finance, like this is the biggest piece when it comes to lack of education. And I guess for my experience, or before I talk about, I do finance more so like insurance and investments. And I work for a financial institution on the insurance side, as well as having my own business selling products and stuff like that. For my experience, reason why I commend you for putting this together was my experience was the opposite. I think it was Chanelle who talked about with OSAP, maybe of her story with OSAP. In me going to OSAP, like my parents weren't from here like most of us. And I guess that makes me first generation Canadian. They didn't really understand how a lot of the strategies work. Like being from the islands, I just remember growing up, my parents, the most they said as education was savings. If I made $100, save 50 and spend 50, but there wasn't more so the understanding of that 50 that you're saving, where are you saving? That's a whole other conversation. So in taking OSAP, they didn't have post-secondary like most people now. We have RESPs. So there wasn't that savings in place. And they were eager for me to go to post-secondary, but there was the lack of knowledge, not to say it was their fault, because there was no one to really showcase or have an environment like this so that they understand how to teach my siblings and I when we go now into the world to get our first credit card, or for example OSAP. Like I learned today on the call, I just knew OSAP was bad in my eyes, especially from my experience. A lot of people talk about based on their experience. I had a negative experience where I left school very early, so I still had my OSAP debt and I didn't know how to manage that. It's paid off now, but in understanding the how to report to them how much you're making of your income, like that education wasn't put on to me. And that was my own personal experience. But joining the call today, I'm a firm believer that I don't know everything. So I always like to join calls like this to learn more. So I now have a daughter. I've set it up that I don't necessarily want her to have OSAP, but it's also good in knowing that if in the event, let's say she didn't have enough, depending what she wants to study, I like the fact that I'm learning to educate her on how to go about it so that it does remain good debt for her. So I just want to commend you guys. And then that was part of my experience and why I was commending you about the workshop that you guys are conducting. So thank you.
Thanks so much, Danielle. Yeah. And even in those situations too, congratulations as a mom for, just perpetuating that generational wealth and allowing your daughter to be free from some of that student loan debt. And also too, there's more to know. Like if you graduate and you end up in your profession and you're a minority, you can apply to have that debt also completely written off, things like that. So I love that you're doing that. We do that. Shaq does that because we don't know everything. And that's how we keep this going. So yeah, Shaq.
Amazing, Monique. I appreciate you sharing. And again, I love when people share as well too, different stories. Because you're right. This is not something that was taught to us, right? This is not in this education system. It's not part of the curriculum to learn about credit. It's something that you learn as you go. And calls like this definitely help. So, you definitely want to give the flowers to BBPA for putting this on, because, it's giving back to the community. It's having these conversations so we can all grow together, not only learn for ourselves, but teach other people. So calls like this are very, very important, 1,000% for us building wealth within our community.
You've got a lot going on in
So
the chat too, Shaq, when you're
yeah,
finished. Yeah.
somebody was saying as well too in the chat box as well too. I think something about the payment or the grants for the student loans as well. So
Yeah.
yeah, like a lot of us are scared of that, but it's having these conversations. So that's where the fear comes down from, our parents who are immigrants who probably coming here from a different country to Canada, and not knowing about, again, the credit system as well too, how it is here in North America, right? So um there's different ways that you can get grants for these loans as well too, especially with OSAP or something with the National Student Loan. So the grants do help as well that you don't have to actually pay back, which are amazing. And Chanelle can speak firsthand on grants because she won a couple of grants, and I'm still learning from her. But yeah, that don't be afraid of that. It's understanding how to manage it, and more importantly, the creditors are not. I started the call saying this: they're not your enemies; they're your allies. So all they require, and I talked about in last week's call, is communication. So if you let them know your situation as well too, they can work with you. All right. So they're not against you. They're going to work with you. So knowledge and education is key. Calls like this definitely help. So I know there's some feedback. I can keep going, maybe take maybe two more before
Yeah.
I go on.
You've got a couple here, Shaq, from your
Pick two.
prior conversation. So you want two. I'll give the oldest the priority. So this one we kind of answered last week. So let's go to, could you explain a bit about the meaning of the stress test? I really wanted you to get that one just because they have the opportunity having you as a mortgage expert. If you could give us some insight on that.
Sorry, as a mortgage expert, insight on
Stress
what, sir?
test. Stress test.
Oh, stress test.
Yeah.
So I'll talk about it briefly. I don't
Yeah.
want to talk too much about mortgages. I do that every single day. But essentially, stress test is something that the Financial Regulation Board kind of has put in to, especially here in Canada. I think it was an amazing thing, and it was a very smart foresight of what we're experiencing currently right now, where interest rates have traditionally been very, very low for the most part, right? Now, as we're going through, a recession, bond yield rates are dropping. You're not getting the exact high rates that you were getting before. So stress test, essentially, to go back to it, to answer the question, is something where, let's just say the rate of the interest rate that you're going to get and applying for is 8%, right? The stress test will now allow you to qualify, or is testing your income based on your debt on a percentage that's higher, which is typically about 2% higher. So instead of qualifying for 8% of what you're actually making payments towards as a mortgage, you're going to be now making payments to at 10%. And that is essentially the stress test. It's just a system that's been put in place for us to qualify you at a higher rate. So that way, if when interest does increase, as it has been in the last 2 years, right? In the last, I'll say 18 months has been really, really dramatic in terms of the increases that we're seeing every so often from the Bank of Canada. It allows you to be able to afford your payments to your mortgage. And that allows lenders, allows mortgage agents like myself to assess somebody's ability to pay back their debt. And essentially, when you're running a mortgage, or if you're applying for any basic small loan, they have something called TDS and GDS, which is total debt servicing and gross debt servicing. So basically, based on your income, are you able to pay back the debt that you currently have and the debt that you are looking to apply for? So hopefully that answers your question on a very high level of what the stress test is. It's usually about 2% of the actual rate that you're getting or applying for.
Awesome. Thank you so much, Shaq, for answering that question. We have somebody else. I answered it in the chat a bit, but you can touch on again whether or not, just super briefly, it's good to approve or accept additional credit. So if you have a credit card, you've got 500, they say, hey, you're doing so great, let's give you $1,500. Are we accepting it? Are we not accepting it? And what is your perspective on that?
So all depends on the person's situation. I'm always gonna relay it back to the person, because not everybody can handle it. But if you're somebody that can handle it and you're making good income, you have a steady job, good tenure, and you've already been doing well, yes, take the credit. Especially if it is a line of credit, as I mentioned before, because it's better to have it and not need it than need it and not have it. A bank is a place you go to when you and apply for stuff. You're gonna get it when you can prove that you don't need it. But when you need it, unfortunately, you're not gonna get it, right? Because typically when you need it, you're in a bad situation. So I always tell people, and I always advise my clients, especially if it's something like a line of credit, you want to accept that and have access to that capital, just in case something were to happen, and then you have something that you can borrow against, right? So it depends on the product, and it depends on the person as well, too, if they're able to handle that additional credit. But if they're offering you, that means you're in good standings typically, and that you're somebody that's able to manage it as well. And that brings me back to another point that I wanted to mention before, that previously Chanelle shared that she does well in her credit, and Chanelle, you mentioned as well too that you can now use these offers that you're getting to your benefit, because Michael even talked about it as well. You can call these companies. I talked about it on last week's call as well. A lot of things we're talking about is going to be regurgitated, but you can call these companies and negotiate and get your rates lower. If somebody's offering you from another institution a low interest rate of, let's just say 11%, and you're paying 19%, now you can call your actual credit card company and say, listen, this is the offer I'm getting, lower my credit. And the worst thing that they can say, or lower my interest rate. And the worst thing they can say is no. But most of the time, more often than not, they're gonna do that because they want to keep you as their customer, right? And we all know, as we mentioned before, you want to keep your credit products and lines open as long as possible, because now you're building a good credit history. So I kind of tied it back into today's topic.
All
Let me
right,
take
Shaq,
one more.
you want to take one
Yeah,
more?
let me take one more, and then I'll continue going. We're almost done, guys.
I think you guys have talked about having your student debt being removed, but as somebody from a minority group, can you speak about it more? So Sarah
Yeah,
wants
so
to know, we've spoke a little bit about student
yeah,
debt relief, but at being part of a minority group, can you speak about it more?
yeah, for sure. I'm going to speak on it very briefly. Um, Typically, when it comes to debt on your credit report, it lasts about 7 years. But when you're on, in terms of being fully removed, it comes down to negotiating. It comes down to um, being on the programs. If you can prove that you can't afford the student debt that you have, and you're not making current amount of income to keep up with the payments, uh, you can get it removed, but working with somebody who's maybe a lawyer or credit agency, counseling agency, that can maybe write a letter for you on your behalf, and it potentially can get it removed after that 7 year mark point. That's the kind of strategy I can only talk on a very high level. Maybe on a one-on-one call, we can talk about it a little bit more details of different strategies. But it's very difficult for me to speak on getting things removed because everybody's situation is a bit different.
Yeah, let's.
But thank you guys. Go ahead.
No, I was going to say you can carry on, Shaq. I think that covers like the majority of the different topics everyone was discussing. I don't want you to get too redundant and you have more material for
Yeah,
us. So, yeah, go ahead.
amazing. Perfect. So let's keep it going, guys. Thank you. Thank you for the feedback. Again, like I said, it's keeping the conversation a bit fun. And I'm sure everybody in the chat and everybody on the call tuning in right now is learning from one another as well. So let's keep it going. How do you continue to build positive credit habits? This is going to be a gem, a cheat code for a lot of you guys. Some of you guys have already been doing it, right? It's literally setting up things automatically, right? It's setting reminders in your phone. Everybody, we're in a digital era right now where, Apple has Siri, Google has Google Assistant. You can literally tell, hey, Siri, or okay, Google, set a reminder for payment due date, right? I probably activated some of these phones right now as I'm speaking, but you can set reminders for yourself of payment dates, of when you're supposed to be doing, or when you're supposed to be paying back your credit card, your line of credits, whatever credit product that you have, your car loans. Make sure that you have reminders so you don't miss it. Because every time you miss a payment, or even late on a payment, it is affected on your credit report. And another a topic or another strategy that I mentioned before on last week's call is calling these companies. If you're a day late and it's your first time, maybe they can remove that late payment, right? So it's communicating as much as possible with these creditors, and they're all on the back of your cards, or you can call your financial institution to strategize on that. But make sure you have it set up automatically. It will help you tremendously, whether it be your phone bills or whatever it is that you have to pay, and your credit card payments as well too. You can set them up automatically as well too. I do that a lot for myself, for my utility bills, for some of my properties. I also do that for my credit card as well too, automatically for my bank account. So that way I make sure my payments are paid on time. And then sometimes as well too, when I'm having a great week or when I get a bonus, I just put money directly onto my principal of my mortgage, or I just make a lump sum payment on my credit card or some of my debt that I have. Those habits, guys, I'm telling you, if you keep going and doing it, and habits are basically actions repeated that now becomes it's done through wow, I can't even speak right now. Repetition, right? They say it takes 21 days to create a habit, 90 days to create a lifestyle. if you could do it consistently for 3 months of setting things up automatically, making lump sum payments on your credit directly to the principal, because there's principal and interest. And Tafari talked about on the first call, right? You want to be making towards the principal as much as possible. That way you're paying less in interest. Having these habits are good, great, matter of fact, great credit habits as well too. They're going to help keep your report very, very high. And regularly monitoring your credit, guys. Producing and downloading your checkings and accounts, your credit card statements, your line of credit statements, looking at it. Some of it you guys can select paperless and have it sent directly to your email. Look through that as well too. See if there's anything on there that you can reduce. Create good habits of actually looking through your statements of what you're actually spending on. Regularly monitoring it, and then lastly, regularly monitoring your credit report as well too. Producing those reports on a month-to-month basis or seasonal basis, let's say every 3 months, looking at your credit report, making sure your payment and your utilizations are made on time and it's low, and pay more than the minimum. If you look on your credit card statements, you're gonna see, an insane number. If you make only the minimum payments of how long it actually takes to pay back the debt, I think it's just like, I don't know, 49 years or something like that. All right. If you're only making the minimum payments, because you're just paying interest, right? So you got to make sure you're paying down that principal, as I mentioned before. So those are great habits that are going to help you maintain your credit and a good habit.
I didn't vlogger.
Is that a comment that we have?
No. What?
It might be by accident. We've got Dwayne here. I'll check on whose mic that is, but Dwayne has a comment. Dwayne, you can go ahead, love.
Yeah. Thank you for touching on the principal rate, because that's was something I was trying to. Well, I kind of figured that's the best way to pay it off quickly, but to know that percentage would make sense to get that information from the credit card, like for my example, like calling Capital One and finding what that exactly is, so I could pay it off quicker, and then yeah, because that'll help also probably increase my credit score too, because it kind of shows that I'm responsible and stuff. Does that make sense, Shaq?
Exactly. Yeah, definitely. Having that open line of communication, again, as I mentioned, I'll always say this because it's going to help you guys tremendously with your creditors. It definitely does make sense. And then understanding what you're paying on. Read your documents, guys. Read your statements. Read your terms and conditions. I try to get some type of understanding. And Juliet had a great comment in the chat box as well too. If you need help, there's communities like this that are here to help you out. It's creating those communities as well too, even small communities within your family, or maybe friends and that you want to create a group chat for as well too, that are holding each other accountable as well. And maybe tips and tricks that you guys can share within the community. We're stronger together, and sharing different values of good um stories or situations that help them out, that's going to help you out as well too. So whatever credit card that you do have, know exactly the rate that you're paying, know the benefits that you have for that credit card or that specific product, and have an open line of communication that's going to help you obviously reduce your debt and help you increase your credit score as high as possible. So let me move on. I'm almost done, guys. Keep the comments and the questions flowing. It does help, as I mentioned.
Yeah.
All right, so let's talk about, I talked about this briefly again. I'm just gonna go into a little bit more, bring it right back. And I have a question for you guys after I'm done, but very simple. It's diversifying your credit age, making sure that you have credit products for a certain amount of time. It doesn't pay to close your credit cards or your line of credits or your credit products. If you do close it, always look at getting new ones as well, and then creating that and holding it for as long as possible, especially the revolving debt. As I mentioned before, it's revolving. You want to make sure you have enough revolving credit. And I would say, from my advice, maybe about 5 credit revolving lines. That would be minimum to have. That would be a good area to have, because when you have not enough credit as well too, it affects your credit score. So I'll say about 5 trade lines would be great. And then mixture of both installments and revolving will be good on your credit reports. But question I have for you guys is how do you balance and diversify your credit portfolio, but also managing your credit age products? So how do you balance having a diverse credit portfolio of installments and revolving, as well as managing the age of your credit accounts?
In the meantime, Shaq, while we get everyone to answer that, how do you handle your credit mix as well as the age of your accounts? You guys are giving us some answers to that. You've got a question here. Sieg said, I've heard that looking at your credit score, let's say once a week, can affect your actual score once it gets updated. Is it true? I said to him, checking your credit score is different from a credit inquiry, but we'll have Shaq speak on that as well. So if you'd like
Yeah.
to.
Yeah, very, very, very simple, straightforward when it comes to that. It's you have a hard pull and you have a soft pull. So if you're checking your credit score on, directly through Equifax or TransUnion or the third parties, Credit Karma or Borrowwell, it's considered a soft check, so it doesn't actually affect your credit score itself. While a hard inquiry is going to affect your score, and it depends on how much you're doing. If you're doing, in a year, you're doing like let's just say 24, like two a month, that's definitely going to affect your credit score, and you're going to drop a couple of points for sure off of each inquiry as well, right? So you're because at the end of the day, you're looking like you're somebody who's searching for credit, and that can be a negative thing for institutions and lenders to lend you capital. So it does hurt if you are doing hard checks and you're going from bank to bank to bank, or from different financial institution, and everybody's doing a hard check on your credit score. It's going to hurt your score. But if you're checking yourself, it doesn't hurt because you're doing what they consider a soft pull on your credit report. So you basically answered it as well too, Chanelle. So thanks.
And you got one more here as well. Do you want to go on or do you want to grab this question?
I'll grab a question.
Okay, so sorry, we slid down there. How many credit cards would you say is good to have? And what are some credit card providers that tend to give high cashback return? I guess that's two parts. So first, you might want to know how many credit cards is good to have.
Yeah. So credit cards, again, all depends on the person. I'll always go back and say that, because not everybody can manage credit card wisely. But if you're on this call, you're somebody that is looking for strategies and somebody who takes care of the credit well. So I would say a good amount of credit cards to have is about three or four credit cards. I would say three on the low end. And then in terms of cashback as well too, TD has a great cashback card. BMO has a good cashback card, and also I think CIBC has a good one as well, in terms of cashback cards. But there's other things other than cashback. There's also travel cards that I really love as well too, for those who love to travel. Um, I have a travel card. I love travel cards, and even same thing that we're talking about the personal side, business cards as well too do have these reward programs as well. Another one is Amex as well. American Express, they have amazing rewards that you can use for retail providers as well. So you don't actually have to need these retail cards. Those are some good ones. But again, as always, do your due diligence. You always could look online and compare. There's a lot of these websites, a lot of these institutions do have a compare credit card benefits as well too, as well as their terms and conditions as well. So when you're looking at the benefits, also look at what it entails in terms of the credit card. What are the interest rates that they're charging? And what are the annual fees, because typically with some of the better credit cards, there's going to be fees attached to them as well. And keep in mind, most of these institutions, for your first year, they usually waive your annual fees on your credit cards. And as you go along as well too, if you're taking care of your credit very well, you can ask them to waive it additional years as well too. If you're a good customer and you work with your institutions, there's more benefits for you always, and always keeping that open lines of communication. It just takes the time to pick up the phone and call. Somebody just mentioned Scotia has a great scene card too. I love, well, before COVID, I was at the movie theater like every month. So I was taking advantage of all those scene points. So Scotia has an amazing scene program as well too. that you can get some free movies, and that's pretty cool as well. So yeah, just get credit cards that are benefits or rewards that suits your suitability of your personality, of who you are as a person, and your family's needs as well too. That will be definitely beneficial for you.
Yeah.
Um,
And even just to build on what Shaq said too, Sarah, and she asked, I knew that was going to shock you. Shaq is also speaking from his financial class. So if one is what you can manage, or if you don't even have one or two yet, obviously then three seems a bit high, but that's from someone who is managing their financial wealth really well to start. Or if you're in the initial stages of gaining some financial stability, it's still okay to have one credit card. And then if you need more freed up cash as well, like Sieg, I think Sieg mentioned earlier, you can look into lines of credit as well. So these type of products can serve you similarly to the way a credit card can, but maybe with lower interest and with better terms. It's not that you have to have three. It's just that three would be a good mix.
yeah, and again, that's just my personal opinion, and from the clients I deal with as well too. It depends if you're just a student, just graduating, and you're just very young. Yeah, you want to have at least one credit card. But if you're an adult, in my opinion, you should definitely have at least three credit cards, and maybe different institutions, because different institutions have different benefits, and these rewards can help you out tremendously. Again, utilizing credit wisely and smart, you can use some of these points to pay off. I think somebody commented as well too, like using your points to pay off the credit card as well too. So paying the interest, a lot of them are going to pay for yourself if you utilize it properly. We are all consumers on this call. We're going to spend the money anyways. Why not get something back from it? That's the way how I look at when it comes down to credit cards. Okay, let me keep going. Almost done. I think we have about 10 more minutes on this call left, which is great. So we're doing amazing for time. So yes, going back to what I was saying, diversifying credit history and age. Just have different credit cards open as long as possible. And if you are closing down a credit card, it will be something that maybe you had maybe for a year or 2 years, or a credit line. You want to keep them as long as possible. So having a mix of that. So when it comes to impact of credit history, um, and your future financial opportunities that you may have, um, positive credit is going to help you save a lot of money long term, especially when it comes to the products that I deal with, mortgages and home equity lines of credits and secured loans. You're going to be saving thousands and thousands of dollars on the span of the average amortization, which is the life of a term of a loan, is usually about 25 years. In this market, we're seeing 30 years, 35 years, even 40-year amortization. So loans are extending for a long period of time. So if you have good credit and you practice some of the habits that we talked about before, we're talking about thousands and thousands of dollars that you're able to save just based off of having good credit. Same thing with credit cards. If you're utilizing them, or even lines of credit, to utilizing them to take trips and all of these things that you're spending money on consumer goods, you're saving thousands of dollars by having a good credit score and good credit report and mix and all the things that we're talking about today. When it comes to lowering your credit, interest rates, it's having a conversation, as I mentioned before, negotiating, using different strategies from different offers that you're getting from different institutions can help. And then I have a question for you guys as well, too. Another question. In what ways have you seen your credit impact your history, um, from impacting your financial opportunity? So I talked about opportunities of maybe getting a mortgage by having a positive credit portfolio, um, and that affects your mortgage, a potential mortgage of getting a cheaper interest rate with a bit better lender. What ways has it impacted your guys' credit history by having positive credit habits? I should know. I see you going in on the comments, helping answer some of the questions. I
Yeah.
appreciate it.
Because I know it's a lot
Love it.
for you and we've got like 8 minutes.
Yeah.
And yeah, every week it just thank you guys as well. Like as the host, the engagement gets better and better. We love this. And even Chanelle had a comment. You guys go ahead, come off mute. If it gets too crazy, I'll speak out. So go ahead if you have comments or want to engage with Shaq as well.
Okay, so to answer Shaq's question, I remember a few years back, I wanted to get to buy finance my first vehicle. And so my dad and my grandmother came with me. My dad came with me to select the car. My grandmother came with me to be the co-signer. And so after I decided on the car that I wanted, it was time to, sign all the paperwork. And, the person that the dealer was just like, okay, your grandma's here to be the co-signer. But when he did my credit check, he was like, oh, you don't need a co-signer, which was great. So in terms of opportunities, a lot of the times I don't need a co-signer. Like the credit score kind of carries its weight. I don't need anybody to sign for me. And another thing was the interest rate was something like crazy. Like the car is paid off now, but it was like less than 1% for the interest on the car, which was really good. So things like that.
Yeah, thanks for that, Chanelle. Having good credit, like Shaq is going to speak on it more. It's definitely more important than capital. And this is obviously our way to financial freedom, right? Shaq can attest to that. Whatever's against us, building financial credit, he said it's your report card. You don't need to be making $1 million, right? So as Chanelle can attest to us, having that credit means she gets the lowest interest rate on a car, which means she's paying less, etc. So Shaq, you can speak on that too.
Yeah, 100%. Again, positive credit history, positive credit report, having the aspect of a co-signer as well too. Car companies are famous for doing this type of things. It's very difficult for them to do it now, but back then, having the 0.99% or 1% interest rate on a car loan is tremendous, right? You're not paying much at all on your monthly payments, and you're actually paying down your car itself, because the interest rate's 2%. So you're only paying 2% of interest. So now their payments now, let's just say it's $200 a month, most of that is actually going down towards the principal. So the higher the interest rates are, obviously the less is actually going to your principal. And that's why I mentioned before, in terms of amortization, some of these loans are taking longer to pay off as well. So it does help to have an amazing credit score, because now you're going to be access to the lowest interest rates possible. And if you don't have it, a great strategy, as Chanelle touched upon, is having a co-signer as well too, that can help you guys get lower interest products as well too. Yeah, so that's pretty much it for today's call, for this week's call for positive credit habits. I'm going to summarize it real quick. And of course, at the end, anybody can have some feedback, comments as well too, lastly, to wrap it up. But there will be a survey, as well, as I mentioned before, at the end of this call. Feel free to fill that out, and we'll touch upon it next week's call. So we talked about positive credit history and habits. What I'm going to leave you with 5 key takeaways. Please follow BBPA on the social media platforms as well too. The key takeaways will be sent out this week sometime. But the 5 key takeaways from today's call is: number 1, strategic credit management. Do your research. Understand the different credit products that you're applying for. It's important to understand what you're getting yourself into in terms and conditions, and having the proper utilization on your credit to create a healthy credit profile. Number 2 is a diverse credit portfolio. As I mentioned before, having a mixture of credit cards, loans, installment versus revolving on your credit report. It's good to have a well-rounded portfolio that demonstrates responsible credit management. Number 3 is timely and timely payments and low utilization rates, is having the automatic payments, making your payments on time, sometimes early, sometimes even extra payments that help you. Because if you're just making the minimum payments, it's going to take you a lifetime, probably longer than you have to live on this earth, to pay off your credit cards, when it comes down to credit cards. And utilization, you want to keep it low, within that 30% threshold. That helps improve your credit tremendously. Number 4, long credit history matters. Keep your credit products open as long as possible. So, think twice before actually closing a credit account. It does help, and it shows responsibility. And number 5, Proactive, be active. I talked about this last week. We talked about a little bit today as well too. Be proactive with your credit issues. If you are late on your payments, call these credit card companies, know what your interest rates are, be able to negotiate with them to see if you can get something reduced, see if they can reverse a missed payment. These habits tremendously will help you long term. So thank you guys so much for tuning in this week's call. Hopefully you got value. Hopefully I ignited another fire again for you to do your own due diligence, your own research to stimulate these conversations forward to build wealth together by practicing great credit habits. Thanks again to the BBPA. Thanks again, Chanelle. I appreciate every single one of you guys joining in. I appreciate all the comments. Looking forward to connecting with you guys and seeing you guys next week.
All right, thank you so much, Shaq. You guys hang out for a second while I give you our upcoming events and let you know what's going on. We've got cybersecurity, securing yourself and the organization, and that's on Wednesday, October 25th at 12 p.m. What else do we've got going on? We've got, we're running through it. Okay, so you guys know that after you leave the session, the survey will be available. Please, please, please. As you saw, it helped us a lot throughout today's session. Go ahead, fill out the survey and give us some feedback so we can make the future weeks as beneficial to you guys as possible. Okay, thanks for coming out. Ciao.